I get asked all the time, do you have me some first time home buyer loans, Pam Graham? And the answer is not really, because most of the loans are for all buyers. I mean, there are some restrictions like credit, down payment, things like that. Or let's say VA. VA is for military buyers, active duty, retired, and there's criteria for that too. But overall, there's not really any loans that are for just first time home buyers. Now, down payment assistance, yes, there is down payment assistance that is for only first time home buyers. But here's the I wouldn't say a catch because it's a good catch. Even if you owned a house 3 years or more prior, and that's even if you went into foreclosure 3 years or more prior to wanting to buy a house, you would be considered a first time home buyer. Now, this video, I'm not talking about down payment assistance. I'm just going to go over a few of the different loan programs so you kind of have an idea. It really does depend on your situation. A lot of people, especially first time home buyers, they want to go with FHA. And the reason is it's usually more favorable terms as far as your interest rate is lower. The down payment's 3.5. There is closing costs now. Anytime I say down payment, that's separate to the closing costs. So with FHA, you're looking at about 7.5% ish to come up with to buy a house. Now, that could be in a form of gift or down payment assistance. You could ask the seller for some of it as well, and they can pay for some of your closing costs to reduce the amount of money coming out of your pocket. There's even USDA. So even the beef people are throwing some steak down into the mortgage process. I know, it's cheesy. It made you laugh though. But USDA is more for rural areas. Like if you're kind of familiar with Middleburg or Keystone Heights, Callahan, those areas are considered rural areas, and you may qualify for that if the property is located there. That's 100% down, or I should say zero down, 100% financing. Then you'd be paying cash if it was 100% down, plus your closing costs as well. And you can even buy mobile homes this way too. Back to the VA. The VA is also a loan where it is zero money down, but there are closing costs involved. Again, rough ideas, 3 to 4% of the purchase price. You can have the seller pay some of your costs. You can do down payment assistance too. Conventional is the one that we tend to hear the most about. And that one you can put, they have 3% down, 5, 10, 20% down. Now, if you put less than 20% down, then you're going to have private mortgage insurance with the FHA, also with the conventional too. That amount is calculated in your payment and a little bit up front too. And that is to protect the bank in the event of a foreclosure. They would pay the bank the difference of the price and what is owed. Conventional, the nice thing about conventional, after you have acquired like 20% equity, paid it down by that much, you can request an appraisal to be done and ask for that to be removed. FHA used to be the same thing, and unfortunately, they removed that part. I wish they would bring that back because it would really be nice to have that removed after you've had 20% equity or paid it off by 20%. Now, the next program I'm going to talk about is called NACA, NACA. It is a great program. There are some restrictions, but the closing costs are very minimal. The down payment is zero. But the caveat to this is the process can be excruciatingly slow. So when you first start it, you go to a class and you get started that way. You meet with a counselor, you start with your paperwork. They're going to ask you for lots of paperwork, lots of letter of explanation if there's things on your credit that are questionable. Your credit doesn't have to be perfect. They know life happens. One thing that can mess you up, though, is if you have an NSF fee, and that can mess up your chances and prolong it. Now, once you get started with the process and you're approved, and they are very thorough with that. Trying to close, it's not going to happen in 30 days. Probably isn't going to happen in 60 days. There's going to be repairs that come up. It could be 90 days. It is very detail oriented, so you can't be the faint at heart. But it is an excellent program. And I said I would talk briefly about it, but there is a lot to say about this program. I don't want to keep people from pursuing it, but I do want you to know that it is very tedious, and you have to be detail oriented and on top of things. You're going to have to put paperwork in that you already did over and over again. So you're going to get frustrated, but at the end of the day, you can buy down your rate. You can ask for a seller to buy down your rate. Their buy down is much more simple than a buy down at a bank or a traditional bank, and that can really drop your interest rate, and that's what is really needed in today's market. There's also credit unions that have their own programs where there's no PMI. It's lower down, lower closing costs. You can have the seller pay your closing costs. It's for some of it is for essential personnel. There's some that it doesn't matter what you work or where you work at. It depends on your income. So there is various programs that way. Again, most of them are not for just first-time home buyers. Now, if you're confused or you're not sure which direction or which loan program would be good for you, just reach out to me. I'll be happy to talk with you, and we can work through it so that you can start the home buying process with confidence. In this next video, I actually break down the steps, talking about your credit report, how much down, the planning stages of buying a home before you go and take a look at any homes in Zillow.